Now, next is difference between money market and capital market. As we have completed the money market and capital market, now we'll see the difference between the two on certain basis. So, number one base is participants. So, who are the participants in the money market? As you have seen, that RBI, financial institutions, commercial banks, NBFCs, mutual funds, these are the participants in money market. And when we talk about capital market, then who are the participants? That is financial institution, banks, corporate, foreign investor, retail investors. Yani ki the people from the public also can invest in the capital market, which is not possible in money market. That is retail investor. Now, the second base is instrument. So, what are the instrument of the money market? As we have done the treasury bill, commercial paper, certificate of deposit, call money, commercial bill. These are the instruments of money market. And when we see the capital market, so the financial assets, that is shares, debentures, bonds. These are the instrument of capital market. Now we'll see investment outlay. Investment outlay. So money market have a large investment outlay. Means those who are investing in the money market, the amount is huge. As you have seen the treasury bill, the starting amount is from 25,000 and in multiples thereof. Whereas when we talk about capital market, so the small investment can also be possible because the per unit, the per price of the share is low. That the face value of the one share is, it can be 10 also or 100. ठीक है, one share value, that is the face value of the share, 10 भी होती है और 100 भी हो सकती है. So you can see the difference in the investment outlay. Now duration, the time duration. So money market, here the investment and maturity period is up to 1 year. Means 1 year the instrument has to be converted into cash. So that is why high liquidity is there in the money market. जबकि हम कैपिटल मार्केट की बात करते हैं तो इट इज़ अ मीडियम टर्म एंड लॉन्ग टर्म. मीन्स दोज इन्वेस्टमेंट maturity period is more than 1 year. Then liquidity. So money market instrument enjoy higher degree of liquidity because the instrument can be converted into cash within a day, 1 day also, 15 days also, as you have seen in many of the instruments. So the one institute, that is Discount Finance House of India, established for the objective of providing ready market for the money market instrument. So here money market liquidity is very high, whereas when we talk about capital market, so capital market securities are considered liquid but less liquid than money market. Because in capital market, how it is liquid? Because it is divided into two types of market, primary and secondary. In secondary market, the investor who has purchased the share, he can sell it to some another investor. किसी और को वो सेल कर सकता है. इसलिए liquidity is there in the market, but it is less liquid as compared to the money market, because money market के instrument तो 1 day में भी cash में convert हो जाते हैं. So that is the reason. So these are some of the differences, bases, as you have seen. The number one is participants, instrument, investment outlay, duration, and liquidity. So these are some of the bases. Now, two more bases you can see here. One is safety. So money market instruments are comparatively safer as compared to capital market because the time duration is very less and the participants are also RBI, government. That is why there is less chance of default. So money market instruments are comparatively safer than capital market security, minimum risk of default due to shorter duration of investment. Time duration is very less, that is up to 1 year only, and government and banks and RBI highly rated companies are included under this money market. That is why safety is more in money market. And when we talk about capital market, so it is riskier than money market. Because why it is riskier? Because time duration is also very high and it is subject to market risk. Then expected return. Money market securities yield comparatively less return due to shorter duration, because time duration is less, that is one day also, 15 days also come under 1 year. So that is why the return on investment is also less as compared to the capital market. When we talk about capital market, because there is a high risk, so high returns are also there. Returns on equity shares, so it is enjoyed by equity share in the way of higher dividend and bonus shares. So this is the way of returns. The shareholders get what? Dividend on the shares, and bonus shares means extra shares. So this is the return. So these are some of the differences of capital market and money market.